Welcome to TradersArmy.com, defending your right to build wealth and preserve capital for generations to come. Good morning, everybody. What day is it? It is Friday. Welcome to the Friday morning edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. Hope you guys all had an amazing trading day yesterday as were in our live trade room yesterday morning. So a couple of things to review from that live trade room. If you are new to the channel, do me a favor. Click the subscribe button, hit the notification bell so that you get the alerts and the updates whenever we do post our new daily market commentary. If you are a regular viewer, do me a favor, share this video with somebody else. I really want to try to grow the channel a little bit and let other people see what's out there and what we do and really, I'm trying to promote no nonsense, no fluff trading analysis out there on YouTube and in the social media space, because I got to tell you, all this nonsense and fluff that I keep reading is driving me bonkers. So let's go ahead and dive right in, but I'd appreciate a like and a share. All right. So the S&P this morning, we're up about 1 3/4 points. We had our breakout above the level. We talked a little bit about a potential breakout above here. So leave me in the comment section down below. Let me know if you caught that breakout to the upside, as we did get our upside move. Continuing along much that same path, it created a potential reversal spot a bit lower right in here. If we get a little move on the 15-minute, we created a little potential reversal right in here, and you want to give yourself a little bit of room inside of there as we can have a decent little reversal off of that area. In the Nasdaq, we have a very similar price action where we did break out above the level. We were talking about a potential breakout, and that would be the breakdown we talked about. It's still valid if we base in front of that level. Put in a little bit of a level here during the middle of the day around lunchtime, but I still like the wick over wick area here that was created yesterday for a potential reversal. Once again, if we base in front of that, it's not going to be any good, but I don't know that we'll make it back to there today anyway, as we are already off to the races. Looking at crude oil. So in crude oil yesterday, we talked about the fact that we kind of felt that we were getting a little bit toppy and expected a bit of a pullback, and we got just that, a very bit of a pullback, not a whole lot. This is the time of year where it may be worth taking a look at selling some options around some of these positions, as it popped up there above 61 and then kind of continued to pull back. And I spoke to a dear friend yesterday. We were talking about, a breakout in crude oil, and breakouts are good, but we've gotten very, very choppy here on this way up, and our momentum is definitely waning on our 4 hour. If I throw my 4 hour MACD up here, you'll see that our momentum is definitely waning as prices are continuing to rise. And so I think that it might make sense just to wait until we get some sort of a big move before trying to guess which direction it's going to break. I think that, better probability is we'll make it up to the 62, which is our 4 hour supply level. But we may need a pullback into one of these reversal levels first. In gold, we have a gold supply level up above us in a 15-minute chart, and that 15-minute chart supply level, it's got this little wick over wick area here, so still in play. But gold is one of those ones that we talked about. If you're not trading options on gold have been very effective, and you can use it in iron condor kind of setup. In the next couple of markets, our bonds and currency markets. So yesterday we looked at the ZN, which is our 10-year note, and our best trade of the day actually happened in our 10-year note as price rallied up to our little wick over wick supply area here. We got a really nice move away from that area, came back to its 2-to-1 price target. Now it's continuing to roll over. I think eventually you're going to continue to move down from here. If you miss that move down, I think you may get a breakdown below this area here for price to continue to run. So this level, technically not dead. Technically, we could convert it to a confirmation entry because we didn't trade halfway into the zone. But we did get more than one candlestick in the level, which weakens it more considerably. So I'm going to leave it on here when I go to a 15-minute See, on the 15-minute, we just did a touch and go. So this was the end of one hourly candle and the beginning of another hourly candle, which is why we have 2 hourly candles in the zone. In reality, it wasn't 2 hourly candles that were in there. Matter of fact, I'm going to go a little smaller just to see how long we actually spent in the zone. Yeah, so we actually were in there for a grand total of 15 minutes, and it was just a wick into the zone. So I'm going to leave the level there. Had it been, 2 full hourly candles that were in the zone, that I would have probably canceled the level, but I'm not going to cancel it if it was just the 15-minute piercing. In the Aussie, we had Aussie kind of rallying a bit higher as we're sitting on the Aussie, and the Aussie is sitting here at a potential breakout point above this region here. We've hit it once, hit it again, and now we're basing a little bit below it. So let's see if that continues. In the euro, we have a little bit of a demand level down below that we're coming into. Remember, that's a confirmation entry. And frankly, if we continue, this is a 4-hour trend now. It's officially a 4-hour downward trend. That's going to make everything below us a confirmation entry, because by the rules of our trade optimization plan, which we fill out a trade optimization plan, we can't score anything with a perfect score if it's going counter trend. And buying down here would be counter the big picture trend. So I can look up above me to the origin of this pretty big move down a few hours ago if we make it back up to here. Frankly, I don't think that we will, but if we do, that's a decent little level right in there. Canadian dollar, we came close to our area here. We've sold off, and now we're coming into this 15-minute region down below. Our 4-hour is still in a pretty nice upward trend direction, and it actually lines up pretty well. Now, if you wanted to go candle to candle somewhere down here before we make it to this region, I'm okay with that as well. Great British Pound and Japanese Yen. In our pound level, we've kind of based a little bit, enough that I would anticipate a bigger move up from here. When you see that kind of basing, you usually get some sort of a bigger move up. On the 4-hour chart, our trend is definitely most decidedly down. But we still have our supply level here up above us, and that was the level that was found. If I go to the hourly, this little region right in through here, which was the origin of this move down. And then the Japanese yen, lo and behold, it's still going sideways. So, in a non-trending environment, there's maybe not a lot to do. And this is the time of year that, remember the rules. You don't have to trade every day. There's nothing that says you have to trade every day. You've got to find the level that fits your risk tolerances and your trading style, and then trade that to the best of your ability. So if you have any questions, please make sure you send us an email, support@tradersarmy.com. I genuinely appreciate every one of you who come in and watch this thing every day. I'm so glad that you spend a few minutes a day with us. And then if you want to learn more, go to tradersarmy.com today. So hope you guys have a great day, and I will see you soon.